if government fails to sign another interim economic partnership agreement with the European Union. ECOWAS' failure to collectively sign the agreement concluded in 2014 has made it necessary for Ghana to either sign another interim deal or start paying up to 20% tariffs on exports to the EU market. The exporters, whose mainstay is agricultural produce, are worried of the slow pace in development.
The refusal of Nigeria and Gambia to ratify the 2014 Economic Partnership Agreement (EPA) with the European Union made it impossible for West Africa as a regional trading bloc to conduct business with the European Union based on preferential treatment. The EPA allows West African states to export to the European Union market duty-free. ECOWAS' failure to agree on the EPA therefore means individual states either go ahead to sign interim agreements or start paying duties on the exports. With Ghana's first interim agreement expiring in October this year, Ghanaian exporters will be required to pay duties up to about 20% on exports to the EU market. Some large-scale producers are already contemplating closing down. Golden Exotics cultivates about 1,200 hectares of bananas and pineapples, exports over 1,300 tons a week, and employs over 2,500 workers.
In the unlikely event that something happens in October 1st and we do not have a law in place to protect our businesses, we will only gradually fold up.
Interacting with the media in April this year, Minister of Trade and Industry Ekosbio Gabra assured exporters of government's commitment to resolving the issues.
The government of Ghana will take every measure to ensure that actions that need to be taken to prevent any additional duties being imposed on these companies' products are taken.
But the exporters still think government has not acted in good faith.
If we all agree that it has to be signed, then why the delay? And this is where we do not understand.
Of all the 16 West African states, Ghana stands to lose the most. 13 states, except Nigeria, Ghana and Cote d'Ivoire, find themselves on the United Nations least developed countries category and can export everything but arms into the EU market with or without EPA. Cote d'Ivoire signed a new interim agreement in 2014 and has no worries as October draws closer. Nigeria, on the other hand, has very little to lose as its major export, which is oil, falls outside the WTO regulations requiring the EPAs. This means Ghana has no option but to go ahead to sign another interim agreement, and failure to act swiftly may lead to losing important companies such as Pioneer Foods, Golden Exotics, Blue Skies, Bomart's Farms, among others, as these companies have registered displeasure and readiness to relocate.
A member of the Finance Committee of Parliament, Dr. Mark Asibe-Yeboah, says government has failed to comply with the International Monetary Fund directives, a situation the IMF is displeased with. He says government's inability to send an amended Bank of Ghana bill to Parliament is as a result of the IMF holding back the fourth tranche of the funds.
Dr. Asibe-Yeboah said government was to submit the Bank of Ghana amendment bill to Parliament to grant the law for zero financing by the bank and to strengthen monetary operations, but that has not been done. He said Bank of Ghana in the agreement is not to finance government deficit. The New Joabin MP says he has information that government is forcing the central bank to finance its deficit as against the agreement. He indicates this could be the reason why government is dragging its feet of sending the bill to Parliament.
Last year, the World Bank gave the government a partial risk guarantee of up to $400 million to shore up the issue. This year, there's no partial risk guarantee from the World Bank. The IMF has also indicated to government that if you do the issue, you are going to get a yield of somewhere around 12.5%. That would not send a good signal for to the investor community.
Dr. Esibe Yabua said though the IMF was to limit the country's non-concessional borrowing, government is going ahead to borrow $1 billion from the international capital market, which the IMF and World Bank are not in favor.
The public financial management bill front, on the Bank of Ghana amendment front, the financing of the deficit by the central bank, the issue of the Eurobond, on all four fronts, government is not complying with IMF direct. They make disbursement after you have shown compliance views.
Pleased with government, a reason why it has not disbursed a fourth tranche.
All right. More than 50 driver unions and traders who operate behind the Cocoa Board head office in Accra have threatened to protest against plans by the Ghana Railways Authority to evict them. Welfare chairman at the station, Oforia Manfo, says vacating the land would deprive thousands of traders and drivers their only source of livelihood.
On this 6-acre land are about 3,000 drivers and 1,000 traders who do business here. In a week's time, these drivers and traders may no longer be plying their trade here. On TV3's visit to the site Tuesday morning, the main entrance to the market had been blocked. The news team was informed the action was carried out by some officials of the Accra Metropolitan Assembly and the police service early this morning. Drivers had to use an alternative route to make their way out of the station. The drivers claimed the land was leased to them by the Ghana Railway Authority since 1985 and has since been paying annual rent to the authority. They claim the attempt by the private developer to take over the land started 2 years ago and the case is still pending at the court.
The court is yet to give a ruling on the case, so the man has no right to claim ownership of the land.
TV3 followed up to the area office of the Ghana Railway Company for response on the matter but met the absence of the manager. On phone, the area manager Samuel Kokovina confirmed leasing the property to the traders and drivers but stated recent development has taken precedence over all previous arrangements.
We've been expecting to see our landlord in court since the case started to tell us their position, but they have never been there.
Meanwhile, the current state of the market is very poor. It's muddy at most places, making both vehicular and human movement uncomfortable.
Let's go into gold. Now, Sinko Gold Ghana Limited has commissioned its mine at Mansonkran in the Amansia West District of the Ashanti region. The company intends to produce an annual average of 190,000 ounces of gold within its first 12 years of operation.
Sinko Gold Ghana Limited started production in January this year. $295 million has already been sunk into the first phase of the project. An annual average production of 190,000 ounces of gold is expected within the first 12 years. Managing Director Josephat Zaipa said an additional $300 million will be invested in the second phase of the project to enable the company double its production target.
This official commissioning marks the beginning of a new era for Sinko Gold, one where we will be judged on our operating performance quarter on quarter and our ongoing commitment to sharing the benefits and opportunities created by the mine with our host communities and shareholders alike.
Board Chairman Dr. Bernardo assured the company would continue to support infrastructure development in its operational areas. The Minister of Lands and Natural Resources, Neo Samuels, encouraged other investors to explore opportunities available in Ghana. The Asante-Hene Otumfuo Osei-Tutu II expressed concern on illegal mining activities and blamed some traditional leaders and politicians.
I'm aware that some chiefs have boys who are into galamsey business. I will not forgive anyone.
All right, so let's stay with gold mining. And from Sinko Gold, let's find out what the gold is performing on the world market trading, specifically $1,286.25 there. And you see an appreciation of the price, 0.19%, and the gold price has broken out of a protracted slump and rose overnight to its highest level in 2 weeks. So this is what you're seeing. 2 weeks high level there. And for cocoa as well, what's happening is that now sold at $3,104 a ton on the world market. And some very worrying news, because cocoa grinders in Ivory Coast and Ghana, the world's top 2 bean producers, have slashed output and suspended operations due to a lack of beans fit for production or processing. We're talking about the likes of US-based Gagel, Olam, and Francis Toton, Barry, Calabel, and all others have also suspended their operations. We'll look into that concern later on as we go on in our subsequent bulletins. But look at what's happening with crude oil on the world market now, and it's been dropping consistently for the past 3 days, $49.71 there, low from about $56 sometime last week. It seems analysts were right to predict that the oil price rally would run out of steam not far from the $50 a barrel sometime last week. So that's what's happening with business.